In this video, guys, we're going to look at breaking the consistent loser cycle in trading, of course. Stay tuned. Hey traders, warm welcome to you. All right, so we've probably all been there. If you've been trading for more than 6 months or so, you have probably been in a scenario where you have had loser after loser after loser after loser. You get a winner in there, then you lose and lose and lose, and you look back and you go, I am a consistent loser. And no matter how you wrap everything up, it's just a fact that is staring you right in the face that you are a consistently losing trader. However, the point is you can get out of it. You can get to a point where the rot isn't so damaging. The rot is less. And when I talk about the rot, I'm talking about the equity curve going down. You know, we've all been here, guys. I've been here myself. When your equity curve is just doing this, you know, maybe you get some traction, then you get hammered again, then it just gets lower and bang, bang, bang. And you just think, if only I could stop the steepness of this curve. I just want to start things. I don't want to just shift it straight to going up because I know it takes time. So what do? The first thing you want to do, and we're going kind of backwards here a little bit, but you want to kind of focus ultimately on what you want. Like, okay, I want to have that just flipped, so a nice steady equity curve, and I know there's going to be a curve, I know there's going to be drawdowns, etc. But that's what I want ultimately. However, the process isn't going from that to making 100 grand a month like that. We know that's not the case. I want to do this. I want to kind of calm things off a bit. Don't mind losing still, but I want to flatten out that downtrend. And then I want to move to this. And this is going to be perhaps a break even or slightly uptrend. And then I want to move to this. So we've got a shallow kind of growth here. Yeah, and then I want to move to this point here. That's my ultimate goal, my ultimate step, which is this, right? So we know that there's a process we've got to take. We know that we can't jump from that to that. And we know that majority of people will go through all these phases. And we also know, and I also know, that this phase is the most damaging phase possible, because all you want to do is stop the damage, because you are just bleeding money day after day, week after week, month after month, whatever time frame you're trading on. Of course, it depends on that. And you just feel absolutely devastated. You think, well, how can I be so bad? How can I be losing with such consistency? I'm almost a magician, the fact that I can just give money to the markets at will. It feels like if only you could do the opposite of what you were doing, you would make so much money. But we know it's not as simple as doing that. We know we've got to go through all these phases. So the first thing to think, guys, is to recognize this is the path you will go through. It's going from this to this, to this, to this, to this. It's not going for that. Once you accept that, things start to become easier, because even though that's your ultimate goal, you've broken it down now into manageable chunks, as any big goal is. If you're climbing Mount Everest, I've never climbed Mount Everest, so I'm really guessing here. My point, I guess, that you have areas that you go to, you break it down, there's a point that you stay, there's a point that you go, there's a checkpoint, whatever it's called. You get the point. You don't just go, right, I'm going up that mountain. There are little points, and again, each goal is quite a challenge to get to, and you rest and you kind of take stock of the situation, you eat some food and you sleep, then you go again and you go again and you go again until you get to the goal. And that's the same with this. So anyway, how do you break the consistent loser cycle? Well, once you've focused on going from that to that, because do you know what? When you get to that, it's almost like the most joyful thing, because you've stopped this severe damage. And you know then that whatever you're doing got you from there to there, will get you from there to there, will get you from there to there, will get you from there to there. Yes, you still might be making 100 grand a month doing that, but you know that that is going to be putting you in the right direction. So how do you get from here to here? This is the whole point, right? Breaking the consistent loser cycle. First of all, you've got to be so clinical and so objective about everything you're looking at. You've got to look at it with a clear view, and as if you're a third party auditing your results. You must do that. You can't go into it by making excuses. You've got to literally do a professional audit. Imagine you're being paid a consultancy rate to come in and audit your trading account. So the first thing you do is you come in and you say, hey, what is causing this? What am I doing? And most likely, by the way, guys, it's not going to be staggered. It's more than likely going to be this: bang, bang, bang. It's a few devastating losers, and probably lots of little losers in there, maybe a bit of break even. And there's always fundamental issues. And the reason this is probably a few basic things. One, you're trading too much size because you're trading on such a meaningful amount. You're trading from pure emotions, and pure emotions, especially from a beginner's perspective, are the worst possible places to trade from. It's hard enough as a beginner as it is, but you're trading from pure emotions. So size is the first thing that you come in as an auditor and you say, right, your size is too much. You need to have a tenth of that size. You need to stop the rot, and just whatever that is, that might be devastating. The fact you've gone from 50k to 5k, or whatever that number, 5k to 500 quid, whatever it is, it might be devastating, but you need to stop. You need to take stock of the situation. A tenth of the size, if possible. I recognize there's some minimums out there, but you need to go the smallest possible size that you can. Then you need to look at two, which is almost always the thing. It's over trading. You're trading too much because you've probably got to this point and gone, you know what, I need to make it back, and you've probably accelerated the number of trades you take, and it's digging you a deeper hole. So position sizing, first key thing to look at. Second key thing to look at is the amount of trades you're taking. And the third key thing to look at, and I'm kind of banging this like a broken record with this, is have you got a trading plan? Those are the three core things, without going into your individual stuff, and there's loads more we can go into, but those are the three starting points, because remember, all we want to do is get from here to here. And if you reduce your trading size, you reduce the number of trades you take, and you have a specific trading plan, you will get from here to here. You might not get from here to here quickly, but you will be able to get from here to here and here to here, and at least get to the point where you're learning without losing a significant amount of money. And same with this, you know, if you're losing a small amount of money over the months ahead, it's fine. It's this that kills most people, because they feel the pain of this way more than this kind of, okay, it's a tuition, you know, it's costing me a little bit of money, no big deal, I'm learning loads. Same with this, you know, this is what devastates people. So those three things, guys, are the main three things to look at. It's the position sizing, the number of trades you're taking, and have you got a trading plan. Start there and then build from that. But if you start on those three things and you're consistently losing, I know that one of those three things, if not all of them, will be playing a big part to it. And just by reducing that position size, reducing the number of times you trade, and even if you don't want to go all out, and you know I'm an advocate for having a good trading plan, even if you want to say, right, broad trading plan, I'm only going to take breakouts, I'm only going to take pullbacks, I'm only going to trade on one market, and just bring things in a little bit. Even if you don't want to bring things in right down, and have a nice plan where you've got the strategies you're trading, the setups, the triggers, the filters, all this kind of stuff. Even if you just go, right, I'm only going to trade DAX, I'm only going to trade Euro US dollar between these hours on this setup, that's a good start, and that will bring you from there to there. Anyway, guys, you can see I'm passionate about this because I've been here before, and I know you have too. I know that this is painful, and you want to get from here to here, but you've got to take these steps first. Baby steps, do that. You'll start to get encouraged, just like someone who's 25 stone starts to see the weight coming off. They'll go, right, I'm going to hit it harder. I'm going to concentrate on what I'm doing. It's working, it's working, it's working. I'm getting results. And then you start to analyze things a bit more. That's when you can go into more depth with your trading plan. That's when you can analyze your strategy a little bit better. That's when you can kind of specialize in the things you're good at. That's when you can kind of eliminate the things that are not suiting you as a trader, or not serving you as a trader. That's when you can work your way through. But from there to there, those three things. All right, guys, if you enjoyed this video, a thumbs up is much appreciated. Good trading. Take care. Keep your risk managed. Whatever you do. Bye-bye.